And welcome to another Leumi Financial Corner. With us once again, Michael Zaremsky, head of U.S. Private Banking, Bank Leumi USA, member investment committee for Leumi Investment Services. Michael, good to have you back.
Great to be back, Zev. Thank you very much, and hope all's well.
Michael, the market has been doing well, but many strategists and pundits say it's not going to last. There's going to be a correction. When, in your professional opinion, will this recovery end?
Zev, that's a great question. And with the market, as measured by the S&P 500 up for 7 straight months, and the S&P 500 hitting 53 new all-time highs this year, I think it's a great question to ponder. And before I answer, I just want to reiterate that the views expressed are mine, not necessarily those of the bank or the broker-dealer. I think we're looking at two different issues here. One is the correction concept, which a lot of strategists talk about, and one is the whole concept of what's happening with the market and the economic recovery. And as far as the correction goes, whether we have a correction or don't have a correction, I think ultimately the impact of what's happening economically is going to be far more important. I'm somewhat skeptical about the prospect of a massive recovery, just given how much appetite there is in the market for risk. But again, if we were to see a pullback, if we were to see a recovery, I think it's something that would alleviate itself fairly quickly. As again, I think the economic conditions and the liquidity would continue to just propel markets higher. When we think about where we are in terms of recovery, I think it's a very different question, and I think we really have to address it in two separate avenues because there's really a confluence of two events happening. One part of it is the economic recovery, and in a lot of cases, that's really generated by the stimulus that's been out there from the Fed, from fiscal policy. And that's really trying to get us out of the hole of what happened with the lockdowns from the pandemic. The other thing that's happening concurrently is massive productivity gains that we're seeing in the workforce, and that's really coming through in a lot of corporate earnings, which is what we talked about a couple weeks ago. We continue to see a massive evolution in terms of how we conduct business. We continue to see a significant change in the way we're bringing up adaptations to new technology and the behavioral changes that they create. And therefore, we're seeing massive upshift in productivity. As we had talked about last time, GDP is at all-time high levels, and we're doing so with pretty significant elements of the economy still not really recovered yet. And we're doing it with a lot less hours worked, which is the productivity gains. So again, from the economic perspective, the V-shaped recovery that we've had overall is probably even stronger than most people realize because we still have a long way to go in terms of recovery in hospitality, leisure, travel, a lot of the local businesses, restaurants, entertainment. Those jobs and those opportunities will continue to come back little by little, and then we'll really continue. Then from that point, we'll really see the massive part of the productivity gains that have been out there. One of the questions that a lot of our commercial banking clients tend to ask is, particularly in C&I type businesses, they're seeing a big boom. They're seeing a lot of the supply chain disruptions. They're seeing strong order flow, and the question is, again, as you said, when will this end? And in my opinion, the stimulus that's been injected into the economy is likely to stay in the economy for many, many years. Savings rates for personal balance sheets for the U.S. economy as a whole are still in the $2 trillion range, and when that money does get spent and that money does get deployed, there's a massive multiplier effect of that happening in the marketplace. So, for example, Zev, if someone were to buy a house or move into a different house or buy an apartment, they have to furnish it, they have to buy things, and they put the money into the economy, and they really will continue to stimulate it. From my perspective, if we look back at 2008, 2009, we had this massive financial crisis where, really the plumbing of the financial system was broken. We had to rebuild it, and we had a long, process of recovery from there. And the amount of stimulus that was pumped into the market to do that was far, far less than what we see today. In today's world, we've seen a massive V-shaped recovery, and we've seen a tremendous amount of liquidity, multiples of liquidity pumped into the market. So if we had a 10-year bull market from the ashes of the financial crisis, which were only really punctured by the pandemic, my question is, why wouldn't we have the potential to see even more sustainable bull market economic growth activity from here? So I think that there's still a lot more legs in recovery, and I think that there's a lot more that we have to go in terms of rebuilding, recouping, and changing the dynamic shape of our economy. And I think that we're seeing a whole new paradigm evolve because of all the adaptations of technological improvements that are happening all throughout our economy to basically increase productivity for the American worker and, again, continue to feed the growth of our economy.
I think it's so important that it's nice to hear that with the advent of a new Jewish New Year, at least some good news that what's out there, what's in store for us. So thank you for sharing that with us.
Thank you very much, Zev, and I'd like to wish to you and to all your listeners a very happy and a healthy New Year.
And to you a happy and healthy New Year. Michael Zaremsky is head of U.S. Private Banking, Bank Leumi USA, member of the Investment Committee for Leumi Investment Services. We're going to be right back. Don't go away. Stay tuned.